It was a rough day in the market for First Majestic Silver on Wednesday following the release of their third quarter financial results, with the company seemingly unable to catch a break with the timing of their earnings release. The company saw the equity sink sharply on the day before recovering to a decline of just 7.6%. All this comes amid another record-breaking quarter for the company, when the third quarter saw a total of 10 new records set in terms of its performance, including record operating cash flow of 29 cents a share. Let's dive in. First Majestic in the third quarter posted record quarterly revenue of $285 million, of which 56% was from silver sales. The figure represents a 95% improvement on a year-over-year basis from $146 million, alongside an improvement of 8% from the second quarter results, and represents the third such consecutive quarter of record revenue. Furthermore, First Majestic appears to be on track to exceed $1 billion in revenue in 2025, a huge milestone for the company. That revenue figure is a direct result of a 45% bump in silver equivalent payable ounces sold, alongside a 31% improvement year over year in the average realized price of silver. Average realized prices hit $39.03 per silver equivalent ounce, versus $29.84 an ounce in the third quarter of last year. That top-line revenue figure also includes record sales from First Majestic's wholly owned minting facility, First Mint, which saw Q3 revenue of $11.1 million versus $2.7 million in the year-ago period, alongside record monthly sales in the month of September. The strong revenue growth flowed directly to mine operating earnings, which improved by over 247% on a year-over-year basis, growing from $28.5 million to $99.1 million. This performance is said to be a result of operational improvements at San Dimas, steady growth at Santa Elena, alongside the obvious addition of Los Gatos to the operational mix earlier this year. Net earnings, meanwhile, improved from a loss of $26.6 million or 9 cents per share to net earnings of $43 million or 6 cents per share on a year-over-year basis. On an adjusted basis, EPS improved from a loss of 3 cents per share to positive 7 cents per share. EBITDA, meanwhile, jumped from $39.8 million to a record of $128.6, while adjusted EBITDA moved from $39.8 million to a record of $138.6, an improvement of 248%. In terms of cash flow, operating cash flow climbed from $39.8 million to $141.3, or from 13 cents per share to 29 cents per share on a year-over-year basis, which is said to be driven by those improved mine operating earnings. Free cash flow, meanwhile, tripled, going from $31.3 million to $98.8 million on a year-over-year basis to set yet another new record. All of this led to the cash and cash equivalents growing to $435.4 million, a 13% improvement from the end of the second quarter and another record for the company. While total liquidity hit a record $682 million, which consists of $542 million in working capital and $140 million in undrawn credit facilities and excludes $133 million in restricted cash. We should also mention that post-earnings release, the company filed an early warning report indicating they had sold 17.5 million shares of Sierra Madre Gold and Silver, which was roughly 25% of their position, generating gross proceeds of 23.3 million Canadian in the process. The shares were obtained in 2023 from the $44.9 million all-stock sale of La Guatera, which provided First Majestic with 69 million shares of Sierra Madre. First Majestic declared a dividend of 0.52 cents per share for the third quarter, which is expected to be paid out on or around November 28, 2025. This strong financial performance, of course, is a direct result of the operating performance of First Majestic in the third quarter. Q3 represents another quarter of record silver production, which grew 96% year over year to 3.9 million ounces versus 2 million ounces in the year-ago period. Much of this growth was attributable to Los Gatos, which contributed 1.4 million silver ounces. However, even excluding this addition, silver production improved 25% year over year. Gold production in the third quarter, meanwhile, totaled 35,681 ounces, with total silver equivalent ounce production hitting 7.65 million ounces in Q3, up 39% from 5.49 million ounces in the third quarter of last year. On a site-by-site basis, San Dimas was the big producer this quarter, with 2.69 million ounces of silver equivalent production, followed by Santa Elena at 2.26 million ounces and Los Gatos at 2.13. La Encantada, meanwhile, contributed a further 578,000 silver equivalent ounces to the production mix. As for costing, cash cost per attributable payable silver equivalent ounce came in at $14.83 an ounce, an improvement of 2% from $15.17 in the year-ago period. All-in sustaining costs, meanwhile, improved 1% on a year-over-year basis, dropping from $21.03 an ounce to $20.90 an ounce. That improved costing was attributed to the improved production profile in Q3 of 2025, alongside operational efficiencies and increased throughput rates at San Dimas. Those improvements, meanwhile, were partially offset by a higher Mexican peso and higher royalties as a result of the rising price of silver. That rising silver price environment, while obviously good for First Majestic's profitability, also led to lower reported silver equivalent production of 400,000 ounces in Q3, which is a function of a compressed gold to silver ratio. Using guidance pricing, production in Q3 totaled 8.1 million silver equivalent ounces. As for guidance, no mention was made in the associated news release for the third quarter. However, if you recall, there was a July mid-year update that lifted production guidance while lowering cost guidance for 2025. Production for the year is estimated at 30.6 to 32.6 million silver equivalent ounces, at cash costs of $13.94 to $14.37 an ounce, and all-in sustaining costs between $20.02 and $20.82 per ounce. Those estimates are based on $30 an ounce silver and $2,800 an ounce gold. Year-to-date, production sits at 23.2 million silver equivalent ounces, which sits at 73% of the revised guidance midpoint. However, that is subjected to the aforementioned reduction due to the compressed gold to silver ratio. Silver production year-to-date sits at 11.3 million ounces, which is 74% of the way to guidance, which calls for silver production of 14.8 to 15.8 million ounces. Gold production, meanwhile, is 76% of the way to guidance, with 106,000 ounces produced year-to-date out of a guided 135 to 144,000 ounces. All-in sustaining costs year-to-date, meanwhile, sit at $20.39 an ounce, which is on track for the lower end of the guidance midpoint. All right, so let's wrap it up. The third quarter was a strong one for First Majestic, with the company posting record operating results amid an outstanding silver market. While the share price reaction may not reflect the quality of the earnings here, the decline was probably related to a court decision on a tax reassessment that has been ongoing since 2020, for which there has been no real change. Negotiations between First Majestic and the Mexican tax authorities are ongoing. But you know what? We suspect that the continued performance of this company over the long run will continue to benefit shareholders. Silver has once again caught the eye and imagination of investors, and First Majestic is the sector leader in terms of silver-derived revenue amongst their peers, bar none. All right, everybody, thanks for watching. As always, if there's stories you want us to cover, let us know in the comments section. And if you want more mining content, maybe check out our website over at thedeepdive.ca. All right, everybody, thanks for watching.